Hello everyone, welcome again to my channel. My name is Oshin and I'm not a financial advisor. Today I'm going to be talking about Tesla's inclusion to the S&P 500 index and how I'm investing in Tesla at the moment. The S&P 500 committee issued a statement saying Tesla was going to be added at once to the index on December 21st. Now this is obviously going to create some ups and downs within the market, and we're going to be talking about that in this video. I want to talk about the scenarios that we could be seeing before December 21st, especially on Friday 18th of December. That's sometime this week. I'm expecting a lot of major movement or volatility on Friday. The index trackers and fund managers that are not necessarily the S&P 500 themselves but need to make purchases of the stock in order to give returns as close to the S&P, typically probably a little higher, or at worst it should give the same returns the S&P 500 is giving. They try to mimic and copy exactly what the S&P 500 index does. I'll be totally referencing an article from CNBC and giving my own personal opinions. And please, this is not financial advice. You should still carry out your own little research to know when to make a move on the stock. So right now, let's check out the article, let's review it together, and then I'll share my thoughts afterwards. The title of this article from CNBC is Volatile Tesla's Entry into the S&P 500 May Not Be a Quiet Ride for the Stock Market. And what we see here is they say Tesla's entry into the S&P 500 could be anything but a quiet ride, and it's likely to put downward pressure on other stocks in the index temporarily. Now, basically, this is going to happen because all of the index funds mimicking the S&P 500 index basically have to sell some stocks or some shares of various other companies, because basically what they're doing is they're rebalancing the index fund. That's what they're doing. So, and I think Tesla has about 1.5% of the total index fund right now. So let's continue with the article. Already, investors are gaming how its entry could impact the S&P 500, adding volatility and forcing the sale of other names in the index, as investors and funds that have to own the full index make room for Tesla. So basically, as I said earlier, they're going to have to sell some stocks or some shares of some other companies in order to be able to make room or space for Tesla. The volatile stock has an unusual large market cap for a new member of this index, about $465 billion as of Wednesday, when not including founders Elon Musk's 20% stake. With 17% of the value of the S&P in the hands of index investors, that means about $80 billion worth of Tesla stock will have to be bought on December 21st. That's according to S&P Dow Jones Index Senior Index Analyst Howard. Now, the reason was this, and I quoted right here, is because the index market cap is so enormous and the amount of dollars that is going to be needed to buy for the index people is so large, there is a lot of stock for sales in other 499 names of the S&P 500 index. So basically, you're going to have to sell shares of other companies within this index fund to make room for Tesla. S&P Dow Jones Indices is expected to announce the stock it is removing to make way for Tesla on Friday, which they already did, and obviously was a small cap company, not anywhere close to Tesla. Tesla is around, I think, 7th most weighted right now in the index. Tesla will then go on to officially trade as a member of the S&P 500 on December 21. Tesla joins the S&P at next Friday's closing price, which is this week, a day expected to be volatile already because it is also the quadruple witching quarterly options expiration. The 18th is when all actions happen, but he noted investors other than indexers could be adding Tesla before that and trading the other names in the index. The addition of Tesla will cause the largest rebalancing ever for the S&P 500. Silbert said Tesla could create more trading than many other names added to the index, just simply because it has not been in the S&P 1005 as a member of the S&P 400 mid-cap or the S&P 600 small cap. Often, companies leaving the S&P 500 will join the S&P 400 mid-cap index. And many times, companies graduate from the mid-cap index to the S&P 500 as they grow. When a company comes that is not in the 1,500, it gets a bigger hit. More institutions have to buy them. They are in the index for all US stocks, but they are not in the S&P small cap or mid cap usually. So that's the issue we are facing with Tesla at the moment. The article goes on to say that Tesla could have a similar experience with Yahoo when it was added. It was not a member of an S&P small or mid cap index, and there was a lot of buying interest by institutions. Yahoo stock rose 50% between the announcement and its entry into the index. I think for Tesla right now, we've seen a 41% growth from the announcement. We don't know what it will be by the time it's getting into the index. Fund managers that must buy the index will try to buy Tesla as near as December 18th closing price as possible. As earlier said, the company it's replacing has a lower allocation currently. Therefore, Tesla has to take from other 499 companies in the index. A little piece from each. Basically, that's what's going to happen. Tesla is big, but it's still small compared to Apple, which currently takes up 6.4% of the index, and Microsoft that takes up 5.3% of the S&P 500 index. Tesla will be the 7th largest company in the S&P by market cap after Apple, Microsoft, Amazon, Facebook, Alphabet's Class A and Class C shares. Hickey said he expects to see some selling pressure on the other S&P names temporarily ahead of Tesla's entry. As for the stock that will leave the S&P to make room for Tesla, he said the exiting companies have had mixed performances. But he noted that of the 15 stocks that joined S&P 500 so far this year, most of them have outperformed the S&P since their inclusion. Just 4 have underperformed the S&P index since they joined it. And only one, Dexcom, is lower since it was added. So we could take a look at this, and we see statistically for companies that have joined the S&P 500 this year, we see there's just been one that has given that has lost some value, which is Dexcom. Every other company has sort of performed well. Majority of them have performed better than the S&P 500 index since they were added. So let's see what's going to be for Tesla. Now, this is my personal opinion. If you currently hold some Tesla shares, I would probably advise you to hold on to it. Do not sell, right? All you need to do is you dollar cost average if the stock price comes down, and that's what I'm going to be doing also. I expect from the 22nd, that week of the inclusion, that's from next week, I expect a drop in the price of Tesla stock, a 10 to 20% drop in the price of Tesla stock. But I think Tesla is going to be able to try as much as possible not to go below $564 per share. Looking at the technical charts using Fibonacci, I don't expect the cost of the share to go below $564. If it does go below $564, I am going to be going Tesla stock shopping. Think long term. Where do you see the company in the next 10-15 years? I think Tesla just started. The Tesla growth just started. Again, we've been seeing numbers coming in, EV numbers coming in, and Tesla sales have been increasing, especially in China. Now, the growth potential for Tesla is unimaginable. In auto, it is unimaginable. In energy, it is unimaginable. Now, this company, like I said, just got started. So for me personally, I won't be selling any Tesla stock. But if it does come down below $564, I think I'm going to be buying more. Thank you very much for watching this video. Please hit the like button, share this video with family and friends, and it might help someone who is currently or about to get into Tesla stock. Subscribe to this channel. A ton of you watch my videos but are not subscribed. Turn on the notification bell, and above all, please invest safe.